Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, financial market reactions to yesterday's Fed announcements are still echoing around the world. But first up today, and confirming the strong data we've been reporting for months, the first estimate of economic activity in the December quarter in the US has come in unusually strong. In fact, the best result in nearly 40 years. GDP rose 1.7% in December from September, which is an annualised rate of 6.9% growth. For the full 2021, it was up 5.7%. These are real increases, discounting inflation. But the nominal rise takes the US economy to a $24 trillion behemoth and supercharged by a strong exchange rate. By any measure, today's fourth quarter result is impressive. Although it's not final, 2 more revisions will come over the next month or so. This GDP data also gave us our first look at December PCE data, the inflation measure the Fed is said to prefer. They have an inflation problem though, with that up 6.5% and core PCE up 4.9%. Meanwhile, initial jobless claims for the last week were 268,000 and more than anticipated. And just on 2 million people on these benefits, marginally higher than pre-Christmas, but basically back to pre-pandemic levels. In December, durable goods orders fell 0.9% from November, when a 0.5% fall was expected. This pullback from that isn't a major concern, however, because the November numbers were really strong. But at least they are up 21% higher than the same month a year ago, and new orders for capital goods are up 33% on the same basis, confirming businesses investing freely now. Across the Pacific, Chinese New Year is starting. This year, authorities there are trying hard to prevent people from travelling because of the COVID risks. But the people are apparently more determined than ever to get back to their home villages after being locked away for 2 years, and it could get ugly. And industrial profits from large and Chinese companies remain positive in December, up 4.2% above the same month in 2020, which is actually their slowest pace in 18 months. They are talking up the 2021 gains over 2020, which of course are large given the weak base. At the World Trade Organization, China had something of a win in its trade dispute with the US. An arbitrator there had ruled China can levy US goods up to $645 million in penalty duties because the US had broken WTO rules. But the amount is much less than the $2.4 billion that China had initially requested legal authority to target. Meanwhile, the EU is taking China to the WTO over Beijing's attempts to apply trade pressure on Lithuania for dealing with Taiwan in a friendly way. Beijing's trade bullying is reminiscent of their pressure on Australia. The EU's response is also reminiscent of Australia's pushback reaction. And the US Treasury 10-year yield opened today at 1.78% and unchanged from this time yesterday, but in between it got up as high as 1.88%. And the price of gold starts today at $1,795 an ounce, and another $37 lower than this time yesterday. And oil prices start today marginally softer than yesterday's recent high at just under $87 a barrel in the US, while the international Brent price is now just under $89 a barrel. And the Kiwi dollar will open today a full 1 cent lower at 65.9 US cents as the greenback surges. Against the Australian dollar, we're firm at 93.6 Australian cents, and against the euro, we're a little softer at 59.1 euro cents. That means our trade-weighted index starts today at 71, and we haven't been this low since November 2020. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.